What's up, everybody? Welcome back to Trading Wars. Thanks for joining me for Sunday Stock Talk. Happy 4th of July to everybody. We're going to be talking first about a lesson on risk management. Like I said a few weeks ago, I want to start doing some lessons before we do our Sunday Stock Talk and our chart picks and everything like that. And that way you guys are more informed, more ready to go for the week. So let me just check my YouTube, make sure the audio is good. Please let me know if the audio is good to go. And then we're gonna get started. Okay, so let's see here. It says live. It looks like it's a little bit delayed. So let me know if you guys can hear me okay. Don't see anything yet. 1 second. So okay, I think we're good. All right. So we got 23 people in here. I'm sorry that I posted the link a little bit late today. Sorry, and I know a lot of you probably have a lot more better things to do today than study the stock market. But for me, this is my life. So I'm always on. I'm always ready to go when it comes to this, to helping people. That's my purpose. Whether it's 4th of July, whether it's Christmas, we get the job done. All right. So I'm going to start off with the lesson today. So risk management, protecting your capital, right? So instead of calling it risk management, we should call it protecting your capital, protecting your money. Because here's the thing with trading, and many of you have gone through this, including myself. Once you lose your capital, once you lose your hard-earned money, you can't trade the next day. And when I first started trading, I lost $25,000. And it took me a while to get back into the market and to recover from that type of loss. And now where I am in my career, those type of mistakes can never happen because I have risk management. I have rules in place to protect me. All right. So what we need to do as a trader is we always must focus first on protecting our capital at all costs. And if we're able to protect our capital, it ensures that our business is still operating every single day. And that's the main thing which we need to do in trading, is have money, because money is the life of our business. Okay. So how do we actually protect our capital? That's the biggest question. All right. So before we get into that, hit me with a 1 if we're all good. You guys are in here and ready to rock and roll. Hit me with a 1. I like seeing the ones. Just know you guys are good. I see some people joining late too, so I don't want to dig into everything right away, because I know a lot of people are going to jump in late. So there we go. We got the ones. Okay, good. Okay. So as a trader, what is going to protect your capital are going to be primarily 2 things. The first one is going to be position sizing. Okay. The second one is going to be risk management. So these are the 2 things that you need to master. Okay. As a trader, you don't know when you take a trade, if you're going to make money or you're going to lose money. You don't know that. Nobody knows that. But what you can know is how much you're going to risk on the trade. So that really is your job as a trader, is to make sure when you go into a trade that you know what your risk is up front. Okay. And you also know how you're going to manage the trade. So where is your stop loss? That's basically what that means. Where is your stop loss? If you don't have a stop loss in trading, you're not trading. And most people, when they first start off, including myself, we did not have stop losses. Okay? We've all done it. But if you want to really have a business and you really want to make it, you need to have protection. Because what happens is, if you don't have a stop loss and a trade goes against you, you convince yourself to bag hold it, and that can literally eat away at your account. So quick survey, quick question. How many of you use stop losses in your trading every day in this live stream here? Hit me with a 2 if you use stop losses. Hit me with a 3 if you don't. All right. And be honest. There's, we're all trying to get better here. So there's no right or wrong answer. So I see mostly 2s. I see some 3s. I see a 1. I see a 2/3. So there's a mix there. Okay. But if you don't do that, if you don't have a stop loss, you mark my words, one day you're going to come back to me and tell me that you should have. And the way that I know is because I've been there before. Okay? So let's dig more into position sizing. And let me give you some real life examples. Okay? So when the general rule, the best rule that you can do as a trader is follow the 1% rule. Okay? Just follow the 1% rule. You follow the 1% rule, you're not going to blow up your capital. You're never going to blow up your capital. Okay? This is the best way to make things simple. Follow the 1% rule. Okay? So let me write it down. So the 1% rule. Okay? Never risk more than 1% of your capital per trade. Okay? A professional trader, we can go up to 2%. But for you, for new traders, we're going to stick with 1%. So what does that mean? So that means, let's start off with options. If you have a $10,000 account, you can only put in $100 in each option play that you take. Okay? Because with the options, especially weeklies, we're going to use the assumption that if you are wrong, you're going to basically lose 100%. All right? So whenever you're trading an option play and you're going to use a maximum of 1% of your account, that's what you're going to put into that option play. Okay? Now let's talk about shares. So with shares, you're going to have an entry, a stop loss, right? Every trade you take, you're going to have an entry and a stop loss. So now you have to calculate how much your risk is. So let's say you enter at $11 with a stop loss at $10. That means you're risking $1 per share. So that means you can take 100 shares, because if you get stopped out, you're going to lose $100. And what's an easier way to do that than by doing the math? You come to Tradingview, you use my discount code to get your $30 off. You go to the long position tool. Okay. And then let's just say this inside bar, let's use this one as an example. Let's say this inside bar is the one we want to take for our trade. So we're going to put it on the top, and let's just say our stop loss is there. So now we're going to double click. We're going to go to risk, and we're going to set this at $100. Okay. So 100. And we're going to make sure that this says USD, not percentage. We want to risk a dollar amount. So we're going to hit OK. So this is telling me I only can purchase 7 shares, because if it stops me out on the position after I get filled, if it stops me out, I'm only going to lose $100. So this is how you control your risk. With options, you put in whatever you put in, you can lose. With shares, you need to calculate the position size based on your risk. And you can do that by using simple math. You just write down your entry and your stop, figure out the difference, do the math. Or you can use the position tool, which I like to use because I don't want to do math. I do math all day long. I hate it. Okay, I don't hate math, but it's tedious. So hit me with a 1 if you guys understand this. Okay, I can go through it again. It doesn't matter to me. I want it to sink in. Hit me with a 1 if you understand position sizing. Okay, hit me with a 2 if you're not sure. Okay, 1, 1, 1, 1, 1, 1, 1, 1, 1, 1, 1. Okay, somebody wants me to go over it again. So, okay, I have a few that want me to go over it again. So we're gonna do it again. Okay, so if you have $10,000, okay, it could be 5,000, it could be whatever. Let's say, okay, let's use $5,000 now as an example. Okay, because most of you probably have small accounts. So let's say you have $5,000. 1% of $5,000 is $50. Okay, if you can't figure that out, use a calculator. So what that means is you can only lose $50 for every trade that you take. If you are doing more than $50 and you go on a losing streak, you will blow up your account. And this whole lesson is to protect your capital. and to build a strong, sustainable business. So if you're using options, you can only buy $50 worth of option contracts. Someone's asking me about a stop loss in options. Yes, you can, but I don't want to go into that because the options are very volatile and sometimes you can't really have a stop loss in there because if you go too tight, you're going to get stopped out before the position even has a chance to breathe. So we're going to keep it simple and we're going to say you're either going to lose 100% on the option or it's going to go to the moon, one or the other, basically. So you can only put in $50 per each option play that you take, and that's how you protect your capital. Okay? But if you're using shares, when you're using shares, it's a different story. Because with shares, you have to buy shares, basically, right? And your risk is not the share price. Your risk is the difference between your entry and your stop loss. Okay? Because that's how much you're risking per trade. So the two ways to do it is do the math, take the difference between your entry and your stop. So let's say you're risking $50 per trade, then you can only buy one share in that case, right? But if you want to use the position tool calculator, right? If you want to use the position tool calculator, then what you're going to do is you're going to go into Tradingview. Okay, you're going to hit the long tool. Let's say you want to take this inside bar as your trade. You're going to hit it like this. Let's say your entry is going to be right on the top of the candle. Okay, stop loss right there. You're going to go into here and you're going to click on risk and you're going to put in your risk. So $50. You're going to have it in USD currency. You're going to hit OK. Now, Tradingview will automatically tell you you can only buy 3 shares of Johnson & Johnson because if you get in here and it turns around and stops you out, you're only going to lose $50. So this is what we call protection. That's what a stop loss does for you. And that's what position sizing does for you. It protects your capital. Okay. So hit me with a 1 if we're good now. If not, that's fine. We might have to rewatch this video a few times. That's fine. That's why I do this. That's why I'm here for you guys. No one is going to sit here and do this shit for you guys. Just me. Okay. Now, I'm going to do a simulation with you guys. Okay? How would you grow a 1K account trading options? Hard to find good contract less than 10. You can't. You can't. That's the answer. I'm be honest with you. I'm not here to sell no marketing scam, no bullshit. You can't. That's it. Okay? If you want to do a 1K account, you need to do futures. You can't do options because they're too expensive. Okay? You can do futures because you can get micro contracts. So if you're doing SPY, then you're going to do MES, micro E-mini futures, S&P 500 contracts. Those are the only thing that can grow small accounts. Okay? And I've done that from $5,000 to $88,000 doing that. So that's why I'm telling you, because I'm telling you my experience. And with options, it's not going to work. Okay, so look into the micro future contracts if you have a very tiny account like that. All right, so let's keep going. So now you know you have your stop loss. That's going to protect you. You know you're only going to risk 1% of your capital. Now we have to get to the real principle of trading. Every single trading strategy, a good one, okay, over 1,000, 2,000, 5,000, 10,000 trades will have between a 50, could be lower. Let's start from 40. It could be between 40 to 70% win rate. Any good trading system. So a system that's back tested, it works, it has rules, all those stuff. Okay. So with that being said, we're going to say that you have a 50-50 chance on average. And this is a good way to think about trading. Every time you trade, every time you take a trade, you're flipping a coin. That's it. You're flipping a coin. You don't know if you're going to win. You don't know you're going to lose. But you know if you do lose, you're going to lose your $50 or your $100 or 1% of your capital. You know that's the amount you're going to lose because that's the amount that you put in into the calculations. That's the amount you put into the option contracts. That's how much shares you bought, that you will only lose 1%. So that's your job. You're controlling your job. Okay. So now we assume that you have a 50% win rate. Okay. So we're going to assume that. Now let's go into the table. Okay. So this is the risk to reward table from my book. I share this almost every session. This is the most important table that you need to have. If you don't have my book, take a screenshot and keep it. Okay? Take a screenshot and keep it for yourself. So whenever we take a trade, we're going to go back to the $10,000 example with the 1%. Okay? So let's say you're risking $100. Risk to reward multiples are of your risk. So if you're risking 100, 1.5 means you're going to make 150. 2 means you're going to make 200. 3 means you're going to make 300. 4 means you're going to make 400, and so on and so forth. Okay? So for the purposes of our simulation, we're going to assume that you're in this bucket. Okay? So in this bucket, your average winners are $200 and your average losers are $100. And as we know, from looking at this table and from doing every time I teach you guys this, you only need to win 34 out of 100 trades in order to make a profit. So what we're going to do is we're going to go back and we're going to use this coin toss simulator. Okay? And every time we flip a coin, it's equivalent to taking a trade. Okay? And I want to show you guys what can happen in trading, because this is what I do every single day, every single week that I'm trading. It's just a coin toss to me. Okay? So we're going to flip it right now. How do I do that? Okay, here. So the number of tosses 100, we're going to flip it. So if we win, it's going to be heads. Okay? So look at this. So this is a perfect example. This is just random. Okay? So in this case, we won 50 trades and we lost 50 trades. Okay? So now let's do the math. Okay? We'll pull out the calculator. So we know when we win, so we're going to win 50 and we're going to make $200. Okay? That's 10K. And then we lost another 50 times at $100. That's 5,000. So we're going to minus 5,000. So we walk away with $5,000. Now let's look at the detail. So look at this. I need you to look at this. This is what trading is. Look at this. 1, 2, 3, 4, 5, 6 winners in a row, 1 loss. Okay? 1 winner, 1 loss. Another string of winners. Then look at this. String of losers. Okay? Another string of losers. String of losers. But in the bigger picture, if you follow risk management and your position size is correct, you will make money. So let me ask you guys a question. Honest question. If this losing streak started at the beginning, how many of you would have given up? So hit me with the 1 if you would have given up if you lost 5 in a row right off the bat. Hit me with the 2 if you would have understood that in the bigger picture, you're still okay. Okay, be honest. Be honest with yourself, because this is how you're going to get over your demons. Nobody wants to talk about these things. Okay? All right, so I see there's a lot of wants. I would have given up, honestly, Brian says. Right? This is the reality. This is the reality. Now let's go again. Okay, let's go again. Do that. So let's go here, clear results. Okay, let's go to the table. Let's do it again. Okay, this one, 53 out of 47. 53 wins, 47 losses. This is even better. Now let's look at the streaks. Okay, now look at this. Right in the first, okay, let's do this together. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In the first 10 trades, you lose 5 and you win 5. And then right after that, you lose 4 in a row. You win 1. You lose another 4 in a row. You win 2. You lose another 4 in a row. Do you guys see that? But then look, when you get down here, look at this. This is what trading is. This is the truth. Can you survive this drawdown here mentally and financially? If you don't use the 1% rule, when this losing streak happens, you will not have any money left. Okay? And that's what happens to most new traders. Is in the beginning, you're all excited and you put in a lot of money because you follow your favorite Twitter channels and you just risk the house. And then when things get bad, they disappear or they delete their account and you don't have any money left. So today's lesson is probably the most important. Okay? You need to follow the 1% rule and you need to look at the bigger picture in trading. Evaluate your trades after 100 trades. Evaluate your trades after 100 trades. Not after 5, not after 10. I said 100. And all you need out of that 100 is 34 to win. Is with the 2-to-1 risk reward, all you need is 34 out of those guys to be winners. Okay? So, hit me with the 1 if you understand this. Guys, this is the ugly part of trading. This is the probability part of trading. This is the systematic part of trading. This is the business part of trading. This is not glamorous. It's not pretty. These guys are not going to talk about this out there. They're going to talk to you about the secret indicator, the secret one that you have to pay $300 a month. That's the one they're going to talk to you about. But I'm going to talk to you about the truth. Okay? We need to do another video on the strategies, right? Because all of this assumes that you have a strategy that works. And that's a whole different issue because a lot of you don't have an issue. I mean, a lot of you don't have a system. What you do is you trade on your emotion. You trade on the news. You trade on what you hear other people do. So that's going to be another video. We'll do that another time. So this is a very good question here. Okay, let me just do this one more time. Let me just see what we get. Okay. Man, this thing is too good. I was spinning it earlier and I was getting like 40 heads. And now when we're on stream, it's giving you all the nice ones. What is this? Give me something in the 40s. Okay, I give up. So here we go. Good question here from Junior. What if you like cutting your wins too early and you leave your losses for too long? Well, if you like doing that, then you're in the wrong business. Okay? Because what that does is it creates an inverted risk to reward. And when your risk to reward is inverted, that means you lose more than you win. When you lose, it's double or triple what your winners are. And you cannot make money doing that. And this is a very good point because I'm going to show you on the next chart that we look at right now, Johnson & Johnson. I'm going to show you a real life example of that. So great question. Okay. So let's go back here. So we did the table, we did simulation, we talked about that, okay. And now we are going to we're going to look at Johnson & Johnson. So I went through this one last time. I want to go through it again because it's very important. It is very, very important. Why do I feel like I don't have the right thing on here? 1 second. I feel like I don't have the right thing on here. Yeah, I don't. Okay, give me a second. I'm gonna show you guys some secrets. Here we go. So here's the June log. These are all the trades we took in the swing room. Okay. So we're gonna do Johnson & Johnson right there. 116. You guys get this one for free. All right, that's yours. Okay, there you go. That's yum. Okay, this one is still open. That's the entries and all that. Okay, so here we go. So let me just put this in for Johnson & Johnson. So the entry was 164.39. And the stop loss, the stop loss was 163.30. Okay. Okay. Just make sure again. Entry 164.79, 163.30, 164.79. Sorry, 163.30. Okay. All right. Perfect. Okay. So now we're gonna go to the weekly chart. Okay. And I'm gonna teach you guys a very important lesson here. So we're gonna hit the market replay, and we're gonna replay. Okay. So Johnson & Johnson was a trade we took last week, almost got stopped out on, and turned around and became a 3x winner. Okay. So why did I want to take Johnson & Johnson? Well, we had this inside bar, okay, in this uptrend. So we can see an uptrend here. We also had 1, 2, 3, 4 weeks of selling. So I knew that Johnson & Johnson was due for a bounce. So how did I set up the trade? Like this. I use the inside bar. I want to get in at 164.79. Have a stop at 163.30. And that stop loss is based on Fibonacci. Okay. And let me draw. So the Fibonacci, what I was using basically was I was using the weeks range to get my stop loss. Okay. So here we're going to go. We're going to go to the hourly, and we're going to do this together now. So once Johnson & Johnson passes this line, I'm going to get filled into the trade. Okay. So this is what happened. Okay. Boom. So right away, so 28th of June is Monday morning, we get filled on the trade. So we're now in the trade. We're obviously, not really in profit at all, just a tiny bit there. And this is how it plays out. Okay. Right in the next hour, it comes all the way halfway to my stop loss. And I'm pretty scared. Obviously, like, we're all scared. People are asking me in the room, hey, like, what's going on with Johnson & Johnson, blah, blah, blah. And I'm like, I don't know, guys. Like, I don't run the company, but we're gonna follow our plan. We have the stop loss there. The stop loss is there to protect us. As long as it doesn't hit the stop loss, we're good. Okay. So now we're gonna go next. Okay, this inside bar shows up, right? Boom, breakdown, breakdown. So if you're a day trader, that's your inside bar short right there. That's good money. Okay. Okay, we break down, we pop back up. So over here, we're this much away from a stop loss, right? I was thinking we were gonna get stopped out, but we had a pop. We continue. Okay, we come back down, another inside bar for the day traders. That's another beautiful short right there. That's easy money. Okay, and then we come right here. So this is for my friend who's asking about cutting your losers. Okay, we were 9 cents away. So let's say 10 cents away from being stopped out. So question to you guys: how many of you would have closed the position somewhere here because you got scared that it's going to hit your stop loss? So hit me with a 1 if you would have closed your position when you came 9 cents away or somewhere over here because you were scared. Hit me with a 2 if you're going to stay strong and follow that stop loss. And be honest, okay? Be honest. There's no need for, not being honest, because we want to see, we want you to get better. Okay? So I see a good mix of 1s and 2s. Okay? So now let's proceed. Okay? The rest is history. Boom. Okay? Boom, 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 boom. Gone. Okay? So we made 3 times our money on Johnson & Johnson. So let me now explain to you. If I had taken my stop loss here, or cut my position, close my position, and I did not follow my system, I would have not been able to get this run. Okay? And then if that's the case, you're not in these buckets anymore. These ones, you're not here anymore. You're all the way down here somewhere. Okay? And then if you start, so let's say you risk $100. Let's say you start taking your profits at $50, but your loser is $150. If that's the case, you need to win 80% of your trades. It's impossible to win 80% of your trades. So for those of you that have that problem, you have to learn, put your stop loss in the system and walk the hell away. And if you cannot do that, you're in the wrong game. Okay? If you cannot, if you have to micromanage this, you're going to lose. Okay? You will. All right? So you always need to think in your head, friends. Always. Promise me you're going to think like this. I need to get at least 1-to-1. If I risk $100, I can't do anything until I get to $100, at least. Right? In terms of if you want to exit it all. You can scale out on the way there, but if you want to exit it all, do not ever exit everything of that position until you at least get to 1-to-1. Okay? And that is the golden rules that I follow in order to make money trading. So let's summarize, and then we'll go into Sunday Stock Talk. Let's summarize. So pull this back up. And let's go back here to the weekly and get rid of the market replay. And where did my words go? I think I deleted them. Okay, that's fine. But basically, to summarize, today's lesson is your job is to protect your capital. Your capital is everything in trading. Without capital, you're not going to have the ability to trade. So in order to protect your capital, we're going to follow proper position sizing using the 1% rule. And we're going to use proper risk management, meaning we're going to we're going to put our stop loss and our targets, and we're going to follow some type of risk to reward approach. So you can do 1-to-1, you can do 1.5, you can do 2, you can do whatever you want. But the moment you go below 1-to-1, you are fighting a losing game. Okay? So hit me with a 1 if you guys understood that lesson, you appreciate that lesson. Hit me with the 1 if you're good on that. Okay, I see a lot of 1s. So trust me, guys, I don't want to sit here and talk about this. It's boring. It's not as fun as double inside bar on the daily, or, it's not as fun as a Fibonacci. But if I don't tell you, who will? If I don't have the courage to tell you the truth, then who will? Because I can't tell you guys. I can tell you guys this instead. You know what, guys? I have an indicator that will give you an 80% win rate. And all you got to do is pay $299 a month. It's 80% win rate. And guess what? It might be 80% win rate. But guess what? When you win, you're going to win $10, and when you lose, you're going to lose 100. And I had a student that came to me. He said, Rich, I'm working with this company. I'm not going to mention names. And the win rate is so high, and it feels so good. It feels so good because you win all the time. But when I have one loser, it wipes out all my gains. I said, what the hell are you trading? It was one of those secret scalping systems, right? Win rate was 80% because you're trying to make pennies. But when you lose, you're losing dollars. All right? So don't let that trick you guys. You guys are smarter than that. All right? You guys are smarter than that. This is why I'm teaching you. Don't let those things draw you in. Okay? Good. If we're winning 1 to 0.8 profit, not 1-to-1, and is reverses from that point, then what to do? If we're winning 1. Well, like I said, do 100 trades, then evaluate your system. Okay? Do 100 trades, then evaluate your system, and then go from there. All right. So are we okay to move on Hit me with a 2 if we're okay to move on. I have a little bit of black coffee here. I'm going to take a sip. Just a sip. All right. So here we go. So the next thing I want to talk about is newsletter. Is this the right one? Let me see. Don't think that's the right one. Too many tabs open. You guys know how it is. Here we go. Okay. So I have about 30 or 35 setups in here that I ran in the scanners for you guys. I sent it out to your emails for those who gave me the emails. It's in Telegram right here. So everybody should have your copy right now. Right here it is in Telegram. Okay. I just want to go through the newsletter, look at some of those picks, have you ready to go next week. The biggest one, so if we just look at the top performers, so the biggest one from last week was Neo, and a few people actually DM'd me about Neo and told me they made a lot of money, and I'm very, very happy about that. Let's look at the chart. Okay, so there it is right there, guys. So we had that inside bar on Neo last week, shows up in my scanner. And then right there, just taking that break right there, that was a huge pop on Neo. So for those of you guys that took options, you probably made a shit ton of money. Okay. So that was the best one. Because you see how tiny the candle was. So you had very small risk. If you get in here, stops down here, whatever. If it doesn't work, cut your losses, move on. But the upside is huge. And this potentially, we're going to keep eyes on this. But if Neo wants to continue higher and continue to squeeze and break through all-time highs, we could have probably got the best entry that we could, right? The most beautifulest entry was actually back here on this inside bar. But that was before I was doing the newsletter. Otherwise, I would have shared that with you guys. All right. So let's just look at some of the picks, take some questions if you guys have any. So again, here are the instructions, how to use the trades. This is what we have. So we have the 1 week chart here. I have 25 for you guys. Some ones to note, like Snap, Disney, Fubo. These are good ones. They look really nice. All of these look really nice. Cat is on here. Very powerful, right? And then I have the Holy Grail ones right here and the double inside bar power ones. Okay, so we got all that there. I have some charts for you guys. Okay, and have some more stuff for you guys, some knowledge and free resources right there. And I have my discounts with Tradingview and Trendspider, and I have my results here. So these are all my results. And here's my June results. The link is there. I have to post it on my website. I just didn't have enough time because I've been dealing with so many different things, but I'm going to post it on my website soon. All right, so that's the newsletter. Let me just copy and paste the link in the YouTube here in case anybody needs it. All right. And, this is just my way of being a part of the community and giving and helping people. Guys are not going to do this shit for you. Okay. They won't. This is my way of being connected with the people and helping them. Okay. So that's my gift to you guys. All right. So now I want to look at some chart requests. But before we get into chart requests, anybody have any questions about anything? Hit me with the questions. Hit me with the questions. Which setup is best to you? All of those inside bars, I treat them the same. I don't really see anyone as better than the others. Like I said, guys, I'm a very risk and probability based trader. So I try to keep my emotions out of it. What I like to do is take as many trades as I can and spread out my risk and trade it like a casino. That's how I trade. I trade like I'm a casino. I put my bets in different places and I let it do its magic. If it doesn't work, I cut it. If it does work, I let it run. Okay? Are E-mini futures using big margin? If so, wouldn't that mean much more risk? No, E-mini futures are... The only time you can get into a lot of risk with the E-mini futures is if you're swing trading them and holding them overnight. But if you're day trading them, every point is only $5. So it's not a lot of money. It's really not. I have a video on that. You can take a look. No, between inside holy and double inside, no. Nope. They're all different things for me. I don't like any trade more than the other. I have my setups. I know they're all solid and I trade them. Every, like the Holy Grail versus the double inside bar versus the inside bar, they're all going to have their winning streaks and their losing streaks. So I don't say, oh, I only like the Holy Grail, because I know that at some point it's going to have a losing streak, right? And then that's why I have a mixture of them. So hopefully when one is on a losing streak, the other one is on a winning streak. Can you teach us how to set stop loss limit orders on a broker? I have a video on that. Check that out. What do you do after inside bar? I have many videos on that. Check that out. So you determine your plays looking at the weekly charts. That's for my swing trades, yes. For my day trades, I look at other time frames. For my long-term trades, I look at the monthlies. I look at everything. I have different trading strategies on different time frames. Do you have any Discord channel? Yes, I do. Can we have a seminar on trading strategies? Yep. Would you be able to show us your FIB settings? I did that in the last video, so please take a look there. You have video on conditional orders and how to set them up. Depends on your broker. Okay, so if you want to know more about conditional orders, call up your broker. Some of them have them, some of them don't. Call your broker and ask them if they have it, and if they do, they can show you. Okay. What's next? So let's do the chart request now. So in my Discord room, we have a new channel, chart request for Rich. So I promised the people here that posted in here that I will look at their I'll look at their requests, and then I'm going to look at the ones on the public Twitter, and then I'm going to look at the ones here. I'm going to look at the ones on public Twitter. I'm going to mix them up. Okay. I'm going to mix them up. All right. So we have Amazon. So you guys know Amazon, like Amazon right there. You see that? So that's a weekly inside bar on Amazon. It's pressing against the all-time highs. And if Amazon starts breaking through the all-time highs, one of two things are going to happen. It's going to squeeze through with power because it's been consolidating for so long. It's going to blow the roof off. That's option one. Or option two is we're going to have another false breakout, just like we had here. We're going to poke through the all-time high and we're going to pull back in immediately. And that will be a bad sign for Amazon. That will be a bad sign for the Qs and the S&P 500. Okay. Let's move on. So that's that one. I really like Amazon. I'm really bullish on Amazon. I've been holding Amazon for years. I got into a swing trade in Amazon in the private room a few weeks ago. So, I hope that it goes, and I really do. But if it doesn't, the stop loss is there to protect us. Okay. But trust me, I would love to see it blow. I would. SOS. So right here, these type of tickers, I don't play them. Okay. This looks like reverse stock splits or whatever the hell is going on. And, I see a lot of manipulation down here with these wicks. So I advise you guys, as I'm telling you, as a friend to a friend, is don't play those names because you're going to lose your money. That's just my advice. All right. So if you want to play them, it's up to you. But I'm telling you what I do. I don't want to advise you guys on stuff that I don't think gives you a fair chance to make money. Okay. So this one is different, right? Because even though we do have a shit ton of manipulation here, we can see that. But what we can see here is a vertical push up and a vertical push down. I like these vertical push up and push downs because what it means to me is that there are people willing to buy and there's people willing to sell. Anytime we have that, I like to draw a fib. So I'm going to take the fib from the low to the high like this. Put it across. So I can see we're hovering on the 786 here. So if we come back down to the 886, this is a good place to buy. Another thing to watch is you see how we had that inside bar right there? That was 2 weeks ago. So that inside bar has already popped up. So that gave a little push there. That if you took a day trade on that, that's good for some good money. But right now, just be careful. If this inside bar flips, I would really be watching this level right here, 25.85. Okay, to really look for the potential to get in a good long play here, and your risk would be down here. So risk accordingly for that. but definitely there is some possibilities on that one. Okay, so now let's keep going. FREQ. Okay, not gonna look at this one. This one just, you know, that's not something you guys want to be playing around with. DraftKings. I like DraftKings a lot. I'm actually in DraftKings long. So you can see here, we took DraftKings long together in the private room right there. It broke up and then it came back down. So we could be a victim of a false breakout here, but we took DraftKings back here also. So I'm okay if this one becomes a loser. We already made some money down there, so that's okay. But definitely, if we can gap up, let's say on Tuesday, we can gap up here. So let's say 53.70s. That would be very bullish, and I think we can push higher for sure. Okay. HIMX. HIMX right there, that looks like a double top. I don't see any inside bars or anything, so I would just kind of wait to see if there's an inside bar next week, something else to play off of, okay? So don't force something if you don't see a setup. Visa, I'm in Visa right now. We're in Visa in the private swing room, hoping for this thing to just keep going higher. There was a lot of nice setups here. We pushed into new all-time highs. I'm very bullish on this thing. Hopefully it keeps running, okay? So what else do we have? Plugs. Okay, plug. You know, plug had been going really well with these inside bars. If we just take a look, we had a nice push there for winner, push down for a winner, push down for a winner, push down. This double inside bar pattern here was a beautiful golden gem. Nice double inside bar, take the short below. That was great money right there, okay? So that one was like the market giving you a freebie there. Right now, I don't see a setup. I don't like where it is because it's right up on the 20 EMA and it's on a fib for sure. A shallow one, maybe the 382. Let's see. Take it from high to low. Okay, so 382 is up here. And I don't like anytime something is in the middle of two fibs. Really not a good area to be going long or short because there's going to be trap bears and trap bulls. So just going to step aside from that until we get another valid setup. Spice. You guys know the Spice is right. I mean, we've been killing this one on the day trades, on the options, on everything. This was the best entries on Spice, and this is why I'm doing the newsletter to share opportunities with you guys like this before they happen. All right. And this was just beautiful inside bar breakouts. This is how we want to see inside bars play out. This is the ideal situation. Even this double inside bar right there, that short is beautiful. So even this one up here, beautiful. I mean, it's amazing the things that I'm sharing with you guys. I'm telling you right now, I'm sharing with you guys some things, $1 million strategies over here, guys. Trust me. Okay. Airbnb, SMG. Airbnb, is it chopping around still? Yeah. Airbnb is just chopping. It's been chopping for a while. I don't care about it. Move on to the next one. Just wait for another valid setup. Otherwise, I don't care. SMG here looks decent, probably on a fib. Let's take it from this pivot to the high. Okay, like I said, there we are. Tag the 618. Boom, boom. See that 618 tag? There is an algo in here, but we didn't have much follow through at all. So if we turn the corner, okay, if we turn the corner, we come back up 195, that would be a great confirmation there to that push higher. Okay, so that one looks promising if we have the correct movements. Okay, I'm just gonna pick a few more here. UPST. Okay, let's look at that one. So I gave this one for free on the Twitter with you guys. This is a beautiful, 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 beautiful double inside bar pattern on the weekly. I mean, it's actually almost a triple. It's not, right? But you see these 3 weeks here. So let me ask you guys a question. These 3 weeks of wicks on the top and wicks on the bottom, these 3 weeks here, okay, what are these doing to option premiums for the last 3 weeks? Are option premiums decaying or option premiums increasing here? What do you guys think? Decaying, decay. Good. Exactly. So option premiums have been actually destroyed for the last 3 weeks. So this is a very good opportunity. It doesn't have to work. I don't care if it works. All I care is I'm getting a bargain. Because if I get a bargain and it works, I'm going to make a lot of money. All right. So this is what I'm looking for here. We can take the break above these for the calls. We can take the break below these for the puts. Very simple. Okay. So right now we have a golden opportunity to come in and take advantage of some trap traders. That's what we're basically doing. They're trapped in here. They're getting screwed. We're going to come in. We're going to take advantage of that like a professional. Okay? Good. So that's what that's a beautiful setup, and let's keep an eye on that. Love it. Love it. Cat is another one. Beautiful double inside. So the same thing is happening again. Consolidation on cat, right? We actually took the puts on the day trade back up here. Remember that? And that's the one that's in my pin tweet right there. So let's go to the pin tweet. That was UPST. So here was the one back in the day. We took those puts on cat, right? And it just fell down. So here was cat. This was the double inside pattern that we looked. This one was on the daily chart. So this is the one that I gave. So now let's go back to the daily chart here. Okay. So this cat was here. Okay. So we had that big, see, it's a very similar pattern, right? So check this out. So on the higher time frames and the lower time frames, we have synergy. We have fractal nature, the fractal nature of trading. We have as above, so below. You see, this pattern has already played on the daily chart one time, and it had a great follow through for some nice winners. Okay, that was a 10x on the puts. But then we look at the weekly, we have the same pattern right now. Okay, so it's beautiful. Trading is beautiful. It's an art. It's a masterpiece. It's a masterpiece of human emotions. So I'm not saying it's going to work. I wish it does. I'm not saying it's going to. But there we go. We have the setup. As a trader, we take the setups that fit our rules and we manage our risk. So that's a good one for you guys right there. Okay. Last one I'm going to pick from here. Baba. Let's do Baba. So Baba, I actually gave this one on the 2-week chart a long time ago with you guys. Or was it the 3-week? Let me see. Where's my 3-week chart? Okay, so we go here. We go to 3. Add the weeks like that. And then we press add. Okay, let's go to 3 weeks. Yes. So Baba. So I took the break right there. You see this 3-week inside bar. I took the break of there, Baba, 222.82. I took this break above. And this push right here on puts, maybe about, on calls, sorry, I took calls, maybe about 70 or 80% return. And it sold back down. That's okay because I was able to scale out. But I was in such a good position here with these calls that if it had ripped, I would have probably made 20 or 30 times. But anyways, sometimes this is what happens. You get a push. So as long as you get a push, take some money off the table and then put your stop loss up. And then if it comes back down, that's okay. But you have to take chances as traders, right? You have to take chances as traders. Okay. All right. So let me get to some of the requests. I can't take all the requests, guys. We're at 53 minutes. Okay, so I'm going to pick a few from here, and I'm going to go back to the public Twitter and pick a few from there. Okay, so I see FedEx. So FedEx is in the newsletter, okay? FedEx is in the newsletter. It's inside bar on the weekly chart on FedEx, and that's a nice looking setup right there. We have that nice inside bar right here. We have a short seller up here. So, if we squeeze through, we could get a short squeeze, and we can get a short squeeze, and we can break into new all-time highs. I've traded FedEx many, many times. Given it to you guys for free many, many times. All right. So I like that. Nice setup there. Okay. Tesla. I took Tesla right here. Okay. So that inside bar right there. I took Tesla right there for that break. I took shares. I took options. Yeah, that's pretty much it. I mean, I'm up good money on them. I really hope that Tesla can gap up on Tuesday and then just rip because I'm in it. I want this thing to go to the moon. If not, it's okay. I already made some money. Okay, so then right now I can have my stop loss at break even. I didn't move it yet, but I probably should move it to break even right here, so I'm protected. So I'm probably gonna move it to break even to protect me in case it comes back down. Okay, APPS. I don't see any setups here. This pattern is very dangerous here with this bear bar. So I would just be looking really to play the bar in a sense that if we break up above that high, that could be very bullish. If we break below this low, it could be very bearish. So that's kind of what I'll be looking for there. Like this is an example. So this is the very similar pattern right here. So look at this candle, look at this candle. So you see the break above, nice push. So just be watching that, okay? SPY, like we said, guys, we had this inside bar on SPY and I gave it to you guys. We took this break right there. beautiful money. SPY, as long as the weekly lows, as long as they can hold, we just continue higher. That's most likely what's going to happen. But if we start breaking those weekly lows, if we start gapping down, things can be dangerous. Google basically following the same pattern as a SPY, right? So sometimes these big names are basically, they are the SPY in a sense there, because they have so much weight in the SPY. Okay, CRM and Apple. Okay, CRM, beautiful inside bar back a few weeks ago. That one is paid. Right now, I don't see anything. There's a lot of resistance here, so I don't really see anything interesting me. So I will pass on that. Okay, Fate. Okay, nothing that I see here. I see some potential short on the fib here. Let's see. Okay, there we go. So right on the 50 right now. That's why we had this rejection here. So definitely, if we start turning back down, this would be a pull. This just a normal pullback in a Fibonacci. We could pull back all the way down here. But if we start going above these fibs, then we can come back and test all-time highs. Okay. How do you hold your positions for weeks at a time? I hold them. I have shares, I have options, I hold them. Let's look at some of the requests in the public Twitter, and then we're going to wrap it up. Okay, so let's see what we got here. Okay, go here. So Shaq, Apple, Tesla, we went through that. Let's go through Shaq. You never let them go. Oh, sorry. So that was a question. So basically what I do, like I said, I scale out. So the targets that we have, like 1 to 1, 1.5, those ones that I shared with you, that's what I do. I use those targets to let go of my position. So let's say I have 100 shares. So when I get to the targets, I'll be taking off like 10 shares, 20 shares, 30 shares. And then I always try to leave a little bit of them on for a runner, right? I always use a little bit of them on to see if I can get a lot out of it, right? Because everybody wants to hold something and see it go to the moon. I want to do that too, but I want to do it in a protective way where I lock in, 50 to 75% of my position at a nice target, right? 1 to 1, 1.5, 2, and put my stop loss to break even and let the rest go. When you take calls on 2-week chart, how far out do you take? So the higher time frame you go in the chart, the further out you need to go for expiry, because every candle on a 2-week chart is 2 weeks. So you can't buy next week and expect it to move. Okay. So if you're going to go 2-week chart, get at least 6 or 8 weeks out, right? Take your time frame, multiply it by at least 2. Okay. Between 2 to 4, that's where you want to go in terms of expiry. Get slightly out of the money if you want, or you can do in the money. Okay. This one right here, Shaq, beautiful inside bar right here. I believe I posted this one in the newsletter too. So we could just play the break of the inside bar, break above long, break below short. Very simple, guys. Okay. So there we go. So hit me with the 3 if we're good. You guys enjoying the content, everything good. Hit me with the 3 if you learned something. And we, I just want to help you guys. I want to teach you guys. I want to be there for you guys. That's what it's all about. Okay. So I got a bunch of orders that I have to put in tonight. Are you all position swings or investments? Yes, I have a separate account that I use for investing in a tax-free account. I put my money in there, some of my money in there to invest. Yeah. So yeah, good reminder, Todd. Market is closed tomorrow. I'm going to put my orders in tonight. And, so basically on Tuesday, they're going to become active and let them go. Is conditional orders how you set orders to fill at certain levels? Watch my videos on order types. Okay, I have a YouTube video on order types. I use stop limit orders for shares. For options, you can use conditional orders, but it depends on your broker. Do you ever use option flow tools? As of right now, no, I do not use any of them. Maybe one day, I don't know, but right now I don't. All right. So I know it wasn't the most fancy. Would I please switch to streaming 1080p? Sure, I'll try to figure that out, how I can do that. I'll look into that. Okay. Someone says, how can I get into your private room? Okay. right here, tradingwars.com. Okay, if you buy my book right now, you get 1 month for free in the swing trading room right there. Okay, so that's a deal I'm still doing. I may or may not cancel it after the 4th of July. I don't know. It's been doing really well, so we'll see. But if you just want to do the room, here's all my results. All you got to do is hit subscribe. Okay, hit subscribe there. DM me your Twitter and your Discord, and I'll take care of you. All right, guys. All right, so any other questions with anything? Anything that's bothering you? Anything you want to talk about? Let me know. Anything? I want to say a few words before we go into next week. You know, risk management, position sizing is the best thing that I can teach you guys. I don't care what you trade. You can trade cup and handles, fork and spoons. It doesn't matter to me. What I care about is you do not blow up your account and that you're able to have an account to trade with. That's what's important to me. It's important to me that you manage your risk, you position size correctly, and you will be in this game for a long time. Okay? You can trade anything you want. I do my style. It doesn't mean it's the best. It works for me. So the closing remark that I want to say is have a stop loss, manage your risk, position size properly, and you're going to thank me later. All right? So that's it. I'm out. Thank you very much. Market is closed tomorrow, so I don't know what the hell I'm going to do. You know, it's going to be depressing. So maybe I'll put out some more content, some more videos. Stay tuned for the day trade picks for Tuesday. Basically, maybe I should just post those. I'll probably just post those tomorrow. Post those tomorrow instead. All right. Why no stop loss on options? Because you get great entry with FIB. No stop loss on option because if you trade options, if you actually trade options for a long time, you'll understand that the options are so volatile that if you have a stop loss, you can get stopped out very quickly before just with a tiny move. So you can't have a stop loss, especially if you're doing weeklies. Okay? So in that case, you have to do an all or nothing approach to actually make money. If you're trading shares, it's fine because there's no time decay. You can do stop loss. It's very easy to do that. All right. I'm out. Thank you very much, guys. Good night.